Good morning. We're on the floor of the New York Stock Exchange with Kenny Polcari of O'Neil Securities. All right, Kenny, it's official. Larry Kudlow joining the Trump administration.
How exciting is that? I think it's thrilling, right? The country should be thrilled to have someone like Larry Kudlow in that position. He's well thought, he's well respected, he's a brilliant economist, he's a certainly friend of the administration, and he's helped all along. He's helped ever since even Trump started running for president in terms of advising him. So this is just the next natural step for him.
And we know he loves the strong dollar. So what does that mean for the market?
Well, listen, a strong dollar is good for America, right? Really, that's what it means for America. And for the market, listen, the market appreciates a strong dollar as long as there's good economic growth. And Larry's all about economic growth. And so therefore, it's not going to happen overnight, but he's going to try to talk to the administration, talk to Trump, talk to members of the administration, and formulate policy that's going to continue to benefit American workers, the American economy, American jobs. And so with that will come a strong dollar, a better environment, and a rising tide that hopefully lifts all boats.
Do you think that investors are fearing a trade war more now that Larry Kudlow will be in the administration?
No, not at all. In fact, Larry Kudlow, he's been very, very vocal about it, is anti the tariffs, which is quite interesting considering we've had this push and pull in the administration over the last couple of days over who's pro and who's con. Now, he's very thoughtful, he's very methodical about it, although it's not his first choice. I think he's willing to work within an administration to try to soften the blow a little bit and maybe ease back, and we've already seen some of that happening, but I think Larry will be quite influential in helping that happen. One way or the other, I think investors are concerned about a trade war because we've heard warnings out of the European Union from Angela Merkel overnight. We're hearing warnings out of China today, talking about they're prepared for a fight, and so therefore, the whole drama around it is going to cause investors to be a little bit anxious.
What do you make of where we are in the S&P 500 right now, 2749?
Yeah, and now listen, it was key yesterday because we broke that 50-day moving average, which was 2750, right? We broke it. We actually traded down to 2743. So technically, we've broken that level. Now this morning, it feels like it wants to rally back and it wants to try to get north of that again. But I think the market's going to continue to deal with some volatility and uncertainty because of the trade talk, tariffs, and potential trade wars that could result. And so therefore, I think investors should just be prepared for more volatility ahead.
Retesting the high of 2873, what are the chances of that in the next couple of months?
Actually, I think we're going to retest the lows before we retest the high.
Really?
Expand
on that.
I actually think that we're going to test the 200-day moving average again. Quite honestly, I'd like to see us test the 200-day moving average again. Because if you remember, 5 weeks ago when the market imploded and we cut through all those technical levels very quickly in about 3 days, there was a lot of technical damage done to the market. So therefore, the market needs to repair itself. That V-shaped recovery happened way too fast. And now that we're talking about trade wars and potentially this burgeoning deficit coming in the fall, is that I think it's going to create some nervousness in the market. And the market's going to have to test lower to see if the buyers are going to really defend that position. So I actually think we're going low before we go higher.
So the low was 2581. That's 170 points lower than where we are now.
That's right, it is, but that's okay because that is a key technical support level and a level that I think the market needs to test to reassure itself that the buyers will defend that position.
Moving on to sectors, we had news of the Toys R Us store closures, liquidation.
Yeah.
What's your outlook on retail?
Listen, I'm sad for Toys R Us. It's kind of like an American icon, right? But one way or the other, look, retail's been under pressure for a long time now as a result of Amazon, right? And so the Toys R Us story is just another nail in the coffin that's delivered to the industry that doesn't respond fast enough to the changing environment. And so it's sad to see it go out. But listen, this story's been going on for a while, right? They've been struggling for a while, and so it's not necessarily out of the blue. But it is another shot in the arm to Amazon because they've done a great job at changing the whole industry, and so the rest of the industry needs to start paying much more attention, and you're starting to see that, right, amongst a number of major retailers, and so I think it'll start to settle out. But Toys R Us, it is what it is.
All right, so another tailwind for Amazon, but can tech maintain the leadership in the market?
Listen, I think tech is great. How can you bet against tech, especially in a century where tech is continuing to change the world almost every day? So I don't think betting against tech is the thing to do. I think tech has to be part of everyone's portfolio. You just have to be, I think, a little bit sensitive to valuations and understand what it is you're buying and where you want to be exposed. goes. But I think tech's a great place, and I would not be a short seller of tech at all.
All right, Kenny Polcari has been helping us navigate the markets all week. Kenny, thank you so much.
You're very welcome.
Really appreciate it.